cutting costs is actually not easy to do,
but something you control.
but you can control.
Yeah.
Getting the growth is you're taking bets, you're doing discovery, experimentation, trying to understand what products your customers need. But the real growth happens when companies get a multi-product solution, particularly in technology, and then you can leverage the distribution to get the growth. AI is going to destroy the world, and it's destroyed valuations of technology companies. And to some degree, there's a little bit of risk in that. I agree there's risk, and I understand those risks, but the shareholder value has been, I feel like, unfairly eroded for companies like Hipages. In fact, all tech companies.
Running a business can feel lonely, especially when the decisions get heavy. Welcome to CEO Risk Pro by Saurabh Jain. Practical insights from the boardroom and the meditation cushion. I'm Saurabh. I've done 10,000 hours in 3 major parts of my life. I've spent 10,000 hours being a CEO, 10,000 hours being a board member, and 10,000 hours meditating. What we're going to do in each episode is really unpack a real business challenge that a CEO is facing and see if we can work through it together. Enjoy. Hi, g'day guys. Welcome to another episode of CEO Risk Pro. Today I've got Roby from Hipages. Roby, do you want to tell us a bit about yourself?
Hey, Saurabh, thanks for having me today. Been a while, 3 years. Catching up on a walk on the cliffs of Watson's Bay.
Yes, that's right.
Down to Vaucluse, Watson's Bay. So a little bit about myself. Obviously, married guy, got a couple of kids. Been CEO of Hipages Group for a little under 22 years. And if you want to go back into the history of time, I did a BCom, majored in accounting, got recruited by PwC, worked there, got qualified as an accountant, worked at an investment bank, Alco Finance Group, not around anymore, worked there for a couple of years. Had another business before Hipages Group. It was a sort of a recovery service. We looked for double payments, overpayments. We built a query. It's all automated now in software, but back then it didn't exist. And we launched Hipages back in 2004.
Okay, wow.
Yeah, so It's been a while. Yeah, and I'm the CEO of the group.
Yeah.
I gather we'll unpack Hipages in a little bit more detail shortly.
Totally.
But for those of you that haven't heard of it, it's Australia's largest marketplace and platform for home improvement services. We have about 360 people, 5 offices, Australia and New Zealand's largest marketplace and platform. And we're building tech for trades and home improvement businesses and for households to use. We've got about just under 70% awareness in the market, been on shows like The Block.
Yep, I've seen it there, yep.
Well-known brand, people love using us.
Yep. Brilliant. So the way we run this podcast is we talk through a business problem you're having right now. We'll kind of workshop that together.
Yeah.
So what's top of mind? What's causing you grief? What are you thinking about?
It's funny you said earlier, it's always the thing that you say first, but I think the thing that obviously is frustrating as an ASX listed company is the market capitalization, the valuation. We're considered what's called a small cap stock. The market has, you may have heard, or people on the podcast might have heard about SaaS Bageddon, and AI is going to destroy the world, and it's destroyed valuations of technology companies. And to some degree, there's a little bit of risk in that. I agree there's risk, and I understand those risks, but the shareholder value has been, I feel like, unfairly eroded for companies like Hipages. In fact, all tech companies have. Some might have been overvalued before, I would say that, and maybe there's a bit of a correction there, but it seems like it's just been like a blanket correction across the board. You're losing 30 to 50% market cap in a very short period of time on technology that's, on technology that's more fear than actually understanding the enablement, the power of that technology. And we've seen this all before. I'm just surprised at the reaction to business valuations. And then the fallback on that is obviously, it's not just me complaining about valuations. It's also about the fact that the growth is what drives sometimes valuation, and achieving accelerated growth can be sometimes more difficult. Cutting costs is actually not easy to do,
but something you control.
But you can control.
Yeah.
Getting the growth is you're taking bets, you're doing discovery, experimentation, trying to understand what products your customers need. And then often a lot of companies just have one hit. They don't get a second and a third or a fourth hit. But the real growth happens when companies get a multi-product solution, particularly in technology, and then you can leverage the distribution to get the growth. And I think that's kind of like where it's getting really interesting. Value is also driven not only by growth as well. There's also perceived value,
Yep.
and there's a whole conversation on how value is driven. And I think no one's actually seen the perceived value of what AI could do in our business, in the Hipages Group business. So, it'd be interesting to unpack that
Okay.
because there's lots of examples of what's going on externally on businesses that have no customers, no revenue, but are getting billion-dollar valuation
For an idea.
for an idea and concept.
Yeah.
Someone was telling me about what's the shoe company in the US. They've just gone all AI. What's the name of the company? I don't know. Do you
I
know?
don't know. I don't know the one. No.
Oh, there's a shoe company in the US. I'll come to me the name in a second. And they've decided to go all AI. They manufacture shoes, and they just increased their valuation.
They just put rubber and cloth together.
Yeah,
In a nice shape.
yeah,
Yeah. Okay, so we want to narrow it down to what's something we can workshop together today.
yeah.
Is the biggest thing the ASX valuation? Like, how do I get people to understand my story so I push the valuation up? Is that more?
So we obviously have investor relations, and
But is that the biggest problem to solve right now, or is that already solved?
it's not solved because I'm finding it hard to convey it. But we do have investor relations, and there's there's an approach to getting perception improved. We just did an investor day yesterday, which was highly successful. And what we're doing is changing the narrative to be more around product, technology, innovation, and also, unfortunately, the market is locked in on a perception of a metric that we provided when we listed 5+ years ago. And for some reason, you talk about an innovation and they want the benefits the next quarter, but the metrics that you released from 5 years ago that build their models to develop their valuation, they can't shake it. It's like it's a weird scenario. But I think the way to do it is you got to draw a line in the sand and say, hey, no, this is a new metric. Don't worry, we'll do a transition phase with the old metrics so that you can do your reconciliations.
Yeah.
But we're now talking about the new innovation, the execution of our strategy that's coming to life.
Okay.
These are the metrics that we're going to be talking more and more about.
Yep.
And our strategy, as it comes to life, you'll see that, and it'll all make sense. So I think that it is being taken care of. We had a reasonable bump in the share price yesterday after a couple of announcements, and that's tied into execution and strategy. Okay. So I think there is a plan.
So that's a path to recovery.
I hope it is.
Yeah, is that what we're talking about? Do you think you've got a good plan?
I mean, we can. I mean, I think, I'm always. My job is to look at the problems and see if we can come up with solutions. So I'm going in 100% confident, but I'm happy to unpack those points if that's what we want to do. Driving growth is tricky. I think, growth is an interesting factor. You bring in new product to market with new customers, you can drive more yield out of your existing customers with that same new product, or you just grow counts. And sometimes there's a trade-off between all three that you've got to do the mechanics of that. And the thinking around that could be something worth unpacking.
So we need to pick one. So we've got the ASX, got the growth, got the AI.
Yeah.
What's the most burning platform for you? Let me put it that way. What's going to give you the biggest bang for buck? What's going to give you the biggest? So
I think the most relevant topic now is AI and how people are thinking about AI. So I think maybe we could go into that.
Yeah.
We can talk about the layers of thinking and some of the unknowns there. So in moving into a territory that I'm not 100% confident I know about.
And what would the question be? Like, what do you want to solve? What do you want to get out of today and to have figured out?
So the thing that I think the big challenge that businesses are having today is the zero-click environment. So what do I mean by zero-click? So you have a situation where you can go to a ChatGPT, which is what most people are familiar with ChatGPT, maybe Gemini as the most B2C side, sort of like in lieu of search. And then you historically would go to Google and type in a query. It's usually started a short-term query in Google, and then became a long tail. So short-term is plumber near me, and then plumber to fix. That's a short-term, and then plumber to fix broken dishwasher that's connected to drain outside of the house in Bondi. That would be like a very long tail term, and that's where things started to progress over the last couple of decades. and then you'd get a set of results. You'd click, 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 make the inquiries like a bit of like a traditional classified approach, or click around until you got what you needed. And it was like quite that was an efficiency on the short tail, and then and that was and the short tail was a bigger efficiency on what was traditional classified ringing around a number and ringing people around, right? So, but now where it's gone is the next layer of efficiency is you're actually having a conversation with an LLM, a large language model, or an agent of a large language model, in this case, ChatGPT. And it gives you and serves up all of the information that you need immediately, and you don't click anywhere. And there's this whole ecosystem over the last 2 decades that's been built up over generating revenue from clicks, and then inquiries, and then selling those inquiries or arbitraging those inquiries. The big opportunity for businesses was to build a brand so that you could avoid and circumvent the Google beast. In Australia, it's primarily Google because it's 90% market share. So you end up starting there, and then you build a brand, and then you move away from that, but you always still have a dependency on there's whole industries. There's search engine optimization, SEO industries, and there's SEM industries. But the challenge is that now you've got a new technology that's come about that's not monetizing yet with advertising, with clicks. 100%. It's too big a category. I think it's like $250 billion of revenue for Google. There's going to be an advertising model. I think ChatGPT, OpenAI have announced that they're going to be doing advertising. Claude, not so much, but it's more enterprise. That's an enterprise sort of solution. So, the big players are going to be doing advertising. So it's coming, but the challenge, even though there's a lot of detail, but just make sure everyone understands what I'm talking about. Not everyone's in tech, but the challenge is how do you get customers to come to your platforms, your properties, your websites?
So how do I get customers to come to my platform?
Without them clicking anything. So that's an interesting one. And then you create as a platform unique technology that has moats around it, data moats, distribution moats. Maybe the category you operate in is not going to be replicated yet by any AI or robotics, for example, trade services. So we've got quite a number of moats. But how do we stop, say, that data moat being handed over and being disintermediated by an LLM? And that's an interesting topic. And I think there's lots of AI tools that will help businesses with productivity. And we can talk about that, but I think if you're not using it, it's a no-brainer. You can then talk about new products that you're innovating and building as a company. And that's at your product innovation layer. But at the top of the funnel, at the higher level, is how do you stop being disintermediated? And then actually that happening on another platform after you've invested, years, in our case, decades on brand. So that's an interesting topic.
So how do I get people to come to my platform? Because you want to ensure relevance, right?
Yeah.
Because what you did to the trading post and Yellow Pages, you want to make sure someone doesn't do to you.
That's right.
It's just the next challenge, the next game to make sure you're relevant.
Yeah.
Okay.
That's right. So it's an interesting topic to unpack. And we could explore in a bit more detail how we're thinking about it. I can be honest and say, look, some things we haven't got the answers to, but absolutely worth exploring.
Well, give us a bit of context. So to be a CEO of a tech company for 22 years, I think besides Jensen, you're probably the longest CEO I've ever met.
Really? That's a good thing.
Because most CEOs have a half-life of 3 to 5 years, right?
Yeah, so listed CEOs, from what I understand, is typically max 5 years, 3 to 5 years. So I'm actually probably at the end of the average cycle just for being as a listed CEO.
So tell us back to how did you start this? How did this all come to be?
Oh, okay, so we'll go back to that detail. Yeah, so the story goes that in 2023, I proposed to my wife. We had just before.
Sorry, 2003.
Geez.
Yeah.
I mean,
you skipped 20 years.
Yeah, just delete 20 years. No, in 2003, we got my wife. I say we got proposed. We looked. We bought a 2-bedroom. We scraped a couple of bucks together from a bit of savings, and we bought a 2-bedroom apartment. It was in a 1960s old apartment, and the experience of renovating that apartment. Because it needed to be renovated. It was really old and done quite cheap. And we just found I found the process horrible. I just didn't know if I needed to get strata approval to get the property renovated. So strata is the group, the body
Yep.
corporate or the group that approves what, if you knock a wall out, can you do it because will the building collapse kind of thing? Do you need council approval for that renovation? Do you need the trades to be licensed? Who's project managing it? How do you know if they're any good? How much do they cost? These are like pretty standard things. And then, like, these problems still exist today. Now, I love to say, and I know that we have for sure made a massive difference in that experience for households and for trade businesses as well. We've helped them as well. But I'll talk about that in a second. So that's a big problem. And we went about trying to solve that through creating content and then building a directory. But
So you start off with the directory service.
yeah. So we kicked off a directory and we decided to go specialized. So, Hipages was obviously a niche. Hi stands for home improvement. And it was a niche in one of the largest segments for the classifieds model at the time, which was Yellow Pages and the outdoor sort of distributed couriers and things like that.
Why did yours work, right? Because Yellow Pages had online directories probably around that time, 2000, 2001. They had sensors, they were doing that.
Yeah.
Like, how come you guys succeeded? How come you guys got this right?
Yeah, so I think there's a few reasons. One of them being is we were a category specialist and we created unique content around the category that then drove people into the directory. Yellow Pages was a generalist. It was for every service and business in the country. So it was very difficult for them to create unique content. They later on tried, but a generalist is very hard. I think.
So what do you mean by unique content? What's an example?
So content like how to check licenses for a trade.
Sure.
How to project manage a trade. Do you need to project manage? How to deal with a strata. What a cost guides should look like for specific projects. So we go very, very deep into rich content that at the time made a lot of sense because SEO was just really coming along, and we were sort of at the frontier of SEO, search engine optimization.
Interaction through people.
So we got picked up, and Google was really going crazy. It was going exponentially. Growth was going nuts. People were going online like crazy. The distribution of broadband and internet technology was increasing like crazy. And so, we created that content and started to get a lot of eyeballs, digital eyeballs, and we didn't have the hard cost of printing and massive sales
the
team.
old world, right?
We were using a lot of tech to, at the time, it's outdated tech now for that stuff because we've evolved significantly.
But you weren't a tech guy. What made you go into a tech?
So my business partner, to be fair, was a tech guy.
He was a tech guy. You was a business guy.
I'm an operational finance guy. I've become the tech guy. It only took me a couple of decades, but so I've become the tech guy. But my business partner he was a electrical engineer by trade. He did the engineering and did the coding.
So the first version, he coded
himself, did it all, and I was doing all the sales. I was doing all the.
And you were selling to trades.
Just selling to trades. Yeah. So just to close the gap on how it became a business model is what I also identified as like like any good accountant said, hey, before I do this thing, I'm going to do a business plan. So I wrote a business plan and I did some research and I realized that the classifieds directory is like a precursor to a marketplace, kind of a marketplace, but it wasn't like a proper sort of like real-time connection tool. You need to speak to customers, and typically with marketplaces, one side subsidizes the other. One side's usually either free or very low in price charges to use, and the other one's more expensive. I quickly realized the expectation, because of the classifieds model, was that what they call the demand side, which is people looking for trades or home improvement business, expect it to be free. Mm-hmm. And on the supply side, they are used to paying.
They were
always paying. They've been paying. For 100 years, people have been paying for classifieds. The supply side, which is the trades, they would pay to have their advertising out there, which is very logical, makes sense. So we, they actually are our customer. You're both customers, but one is paying you. So you've got to speak to the guy that's paying you.
Yep.
And so we speak to them. And what was really interesting about that process was I learned that they actually had a lot of problems. Trades are really street smart. They're smart around how they solve problems. They're the guys that are in the ditch, connecting the wire this way and that way, making it compliant and safe, and getting that done. And they get a lot of joy from that. They love that. And then what I would say is they get the joy of looking at their customer satisfaction, that you've helped them deliver their dream, or you've solved their problem, or the thing that was causing them anxiety. They fix it. They love doing that. They're natural problem solvers, and they get joy from other people's joy, which is great. But they don't like the administration. They don't understand the technology as much. funnily enough, they use technology in their day-to-day. In fact, they were the fastest adopters of the mobile phone technology.
Yep.
But when it came to anything beyond that, sort of too hard. Now that's changing, really changing. We've seen that change in the last 5 years.
Change, yeah.
Generational change, and also I think the macro conditions have forced a lot of change. But going back to that series, I realized, hey, there's a much bigger opportunity than just advertising. But to get our foot in the door with the few dollars that we had together to run the business, we kind of had to monetize and build scale and do that. Now it took us a long time to get there, and there were lots of competitors that replicated what we were doing. I just think I don't know if our tech was the best tech, but we had some unique things in tech. We had some really good capabilities in our marketing, digital marketing, SEO, SEM, search engine marketing. That was superior to competitors, and I think we just executed better. I think we just executed. We were persistent, and we were deliberate and organized, and without much money, we were using spreadsheets and tools, but we worked hard, 80, 90 hour weeks, like any founding starting story. And we got scale. And then I think the next big successful thing for us was that we were very effective at raising money. I think David and I, who's my co-founder business partner, we were good at pitching.
Yep.
And because of our momentum and passion, we were able to raise more money than others. And I think we made a couple of slightly better decisions around commercial business models. We took our time. We didn't rush into some decisions, and I think it leapfrogged against competitors, and then we became the market leader in the category. So, and then we've moved on since then, but I've pretty well packed that.
And so how long were you just a directory service for? How many years did that last?
So from 2004, so 1 July, I actually found the corporate certificate, just a bit of nostalgia. I was looking at some paperwork that I was filing, and I found the certificate of incorporation. So it was in July 2004.
Yep.
So the FY25 financial year, FY 2005. I keep getting two decades there. I don't know why I'm doing that. 2005. And so we were there. We were a pure play directory till 2012. And then we modified to become like an on-demand marketplace. We rebranded from Home Improvement Pages to Hipages back then. And that on-demand was effectively like a reverse auction system where instead of you looking around and then calling and all of that, looking for a business to help you, you would tell us in a form what your parameters were. It was a very simple form. And then Robbie was the matching algorithm. I was finding trades and then connecting everyone and charging for that service. And then we scaled that, and that grew exponentially.
And you charged the trades for that service?
Yeah, we charged a pay-per-lead fee for that. So you got your directory and a pay-per-lead. Now, we could see that was the future. It's in 2012, Google launched Google Local. They launched in America 2010, Google Local. But in 2012, they sort of came to Australia. Things took a couple of years to come to Australia. Now it's like within 6 months, 3 months, things that get tested and are working, they go global. But back then it was a couple of years. And Google Local really started to pick up, and we saw our sort of revenue from our classified model start to decline. Well, not decline, it was the growth rate decline, but we plateaued as a revenue, and we needed a new product. So that
was your first disruption that you had to react against?
Yeah, that's right. Yeah. So Google Local came along.
Yeah. Is that still around? So I never used Google Local.
Yeah, Google Local's still around, but what's happened is when you go to Google, the AI overlays usually are now at the top of the search results, and then you've got Google Local or ads, Google Ads and Google Local. They're interchanged, they tested, but usually maybe Google Local, then the ads.
Okay.
And then SEO has now fallen below the fold. So what that means is that if you look at your screen on your computer, you
scroll down to get actual.
You actually have to scroll down, and the clicks that you generate from below the fold are significantly lower when they're above the fold. For anyone that's in digital marketing, they'll know exactly what I'm talking about.
Yeah.
But it just makes sense. You're making me work as a user to have to go down.
I don't want to scroll.
I don't want to scroll.
I'm not going to read that far down anyway.
I think they said the last time I heard the statistics is our average attention span for anything is 15 seconds. I think it's like 7 seconds. It's coming down to seconds. So who's going to scroll? That doesn't happen. So that's the disruption that the LLMs are bringing to the ecosystem. But in 2012, we changed to a pure play marketplace, and that just went gangbusters. So what we were in this interesting situation where we had to hold the revenue from the classified part of the business while there's that was declining, but we had a new line item coming in. So when you look at the growth in that period of 2012 to 14, we grew nicely, like 15, 20% per annum, maybe a bit more than that. but we were coming off the back of 30 to 50%, and in our earlier 100% growth, 100+% growth.
But what I find curious, right, is like I was trying to say like what made a CEO succeed in this scenario. So you had the exact same problem the Trading Post had, the exact same problem Yellow Pages had. Besides being smarter, better looking, and all that good stuff.
Yeah, no, don't be good about
like what about you allowed you to pivot that way and do something different? Because the other guys didn't.
Look, I think one of the things that I feel as a CEO is numeracy, analytical capability, resilience, and also being not too conservative as you'd expect maybe from more traditional accountants.
So you're happy to take that.
To have some experimentation and risk taking.
And I'm pretty sure like a large Telstra census would not have taken a risk, right? That's not in their DNA.
Or they tried, but they didn't execute well. Like they said, oh, look, we don't have it in our DNA to execute. So they bought a marketplace business and it shut it down a few years later.
Yeah, they bought it, destroyed it, and sold it.
Pretty much. Yep. Well, they just shut it down. They didn't even sell it. They couldn't get it to sell it. So like there were bigger players. I think the thing is I believed in the solution, and I put my own money behind it. So I had the ability to get other people to back it, but it had to work because the shame of being bankrupt was not tolerable. And that's the thing that a lot of...
Imagine telling your mum that.
Yeah, well, your wife, we're already married for 10 years. You've been working at this thing for 10 years. I was like, I can't go bankrupt. Like that's not going to happen. And I think that's another conversation another day. I think the Australian market has a very low tolerance, especially in the Australian market for low tolerance for risk, tall poppy syndrome, and failure is just not an option. And if you fail, you just go get a real job. Don't do this business stuff. I think I still think that still exists today.
It totally does.
Yeah.
But can I suggest maybe you had something different?
Yeah.
I think let's just use Yellow Pages, right? That's an example. Yeah. Anyone over 35 probably knows.
Yeah.
Anyone below probably 20 has no idea what we're talking about.
Yeah.
It's a directory that arrived in the mail.
Well, it's funny because I do induction with a lot of new people. I meet every new person that joins.
And you show them the Yellow Pages?
No, I talk about the Yellow Pages, and often it's like 25-year-olds that are starting.
Yeah.
And I say to them, you guys don't even know what I'm talking about. Your parents probably used the book to hold your cot up if you had a chest infection, so the mucus would come down, and they look at me, what? I'm like, because I haven't had kids, so I don't even know what I'm talking about.
Absolutely.
So I'm finding it hard to find relevance, but
you got to go to a museum and buy a copy of Yellow Pages. Get a copy of Yellow Pages.
Yeah.
So I think the difference between perhaps you and like the Yellow Pages, where you were very close to the problem.
Yeah.
Like you felt it every day.
Yeah.
But if I'm an exec 4 levels higher in Telstra, which I think probably by then they probably own Census.
Yeah.
They were probably so removed from the actual problem.
Yeah.
That they didn't care. They didn't have the same incentive to fix it as you probably did.
Oh, I'm not sure if I agree with that. I think they cared. I think they absolutely cared, but
how come they didn't? How come they didn't succeed?
So I think there's a guy. There's a really good book that I recommend people should read. Is a guy called Hamilton Helmer, and he talks about the 7 powers.
Yep. And
I think one of the powers that he talks about is a counter positioning, and I think the examples that come up in university sort of studies and also external studies and businesses that do strategy is what they say is that often organizations are in the cash flow, in the rut of their day to day, and to reinvent yourself, which would mean destroying revenue, cutting costs materially, changing your whole business, is very intolerable for boards and very difficult for an interim CEO that didn't have the connections to the business at its roots.
Yep.
So best example is Kodak. So Kodak film. So Kodak, if you guys are familiar with Kodak, so Kodak had a phenomenal film business. It was the market leader. It had patents and inventions for film, but they didn't lead the market with digital photography. In fact, I think their patents invented it.
Yeah, they invented it,
but they didn't deliver the product.
Yeah.
I think Fuji or one of the other players, I may be getting the names wrong on that, but someone else came along and digital photography took off.
Yep.
And Kodak, I think, went into administration. And I think they're still around in a form where they live off the royalties of some of their old patents.
Yep.
But that business failed in the end, effectively. And you can imagine you're top of the world, Kodak, selling film to, hundreds of thousands of photography, development studios, what do they call them back then? I forgot even now.
Photoshop.
Photo development studios, and you've got a business model that works, and a new CEO come along and say, hey, there's this new thing coming along, it's going to disrupt us and kill us. We need to go there. And the board will just say, are you sure? How sure are you? Would you bet your whole career on that? No one's going to do that.
The problem with the Kodaks and even like the Yellow Pages is all the evidence is almost to the contrary.
Yeah.
The evidence that a board level sees
Yeah.
actually suggests, like Kodak went bankrupt 2 years after the best year ever.
Yeah. Yeah.
So all the evidence said, no, nothing's changed. We're fine.
Yeah. Yeah.
And I'd love to see what year Yellow Pages had their best
So
year.
that's been proven wrong so many times. And, the counterposition element of the Hamilton Helmer book that he's a lecturer at one of the Ivy League colleges in America. And really, really good read. And anyone that's a CEO or in the board wants to think about strategy, it should be like, there's 3 books that you should read. That's one of the books that you absolutely have to read as a framework to develop strategy. If you're not reading it, you're not knowing what's going on. It's looking at the 7 elements of power. But back to the example that we're talking about, the counterposition that Hipages came along to the market is we're not printing. We're not going to do digital print. We're not going to have field salespeople running around the country getting you to sign contracts. Everything is online. And we're not going to do TV ads and radio ads. That's or newspaper ads to promote our products. We just don't have that kind of money. What we're going to do is we're going to use a new digital form that people are discovering and growing exponentially to get our product in market, which was at the time Google. And if you remember, maybe people who are listening don't remember, but there was a Telstra owned Yellow Pages at the time. There's a gentleman by the name of Saul.
Saul.
The
European guy. Spanish guy or something.
Yeah, Spanish. Like that. Spanish guy. Yeah, Saul. So he was famous and known for Google Schmoogle. That was his line. Google Schmoogle. And boy, was he wrong.
He had the arrogance of a large corporate.
That's right. And it was making so much money. I don't necessarily hold that against him. He was just he's 4 or 5 year old telco CEO. Things don't change. But in this part of the business that was highly profitable, was being disrupted. And we come along and say, hey, we're going to use Google AdWords, SEO. We charged, instead of charging $2,000-$3,000, then this is where the counter positioning makes sense. Instead of charging $2,000 or $3,000 a year for a little black box in a printed document that was just moving to online that wasn't discoverable, to open discoverable and for $89 for the whole year. And send us as much color, as much content, as much information as you want. In fact, you can use it as your own website. And if you have the time to send us 100 photographs, I'll find someone to put those 100 photographs on your profile. That was impossible. It was unheard of. No one could even imagine that being possible at the time. And what did we do? We just had some uni students with some scanners. People physically sent their photo albums through, and we just scanned them and paid them peanuts, and we could justify it. And then it went viral, went nuts, and we grew unbelievably in that time. And so that's a counter position and a change that disrupted many of the incumbents, and we actually were able to go into the market. There were others that replicated us later on, but we did that really well.
I mean, I'm sure Saul would have at the time been like, oh, we have a mode, we have a brand, we have all those things that CEOs today are all talking about. Now, our SaaS company is different. We have a brand. No, our SaaS company is different. We've got customers, we've got a mode. We've got data. He probably had that exact argument back in his kind of boardroom, I'm sure.
Well, maybe data. I don't think the sophistication around data
wouldn't have been back then.
Like nothing like that.
It would be custom knowledge.
They would have had a database. It would have had it.
So that's the first disruption, 2012. What was the next disruption for you guys that you had to overcome?
So we found in 2014 that the unit economics was a little bit challenging, and the way the auction system was working was tricky. We ended up becoming a little bit quite quickly like a Yellow Pages, where the largest provider ended up just winning all the work, and that happened very fast.
Is that because they paid more for?
So we were doing like an auction for the lead, and so the average small handyman next door wanted work, which was what we were about. We were local. We were for the small business. You ended up getting a massive consolidation event happening with the advertising, where the businesses with the biggest buckets saw the opportunity and they just started plowing in and paying per lead. And so we'd end up with customers, with $5,000-$10,000 a month of leads. Now, at the time we were a bit silly in the way we're doing. We had to write off a lot of those sales. We thought they were sales, but we didn't have a good mechanism to collect and charge for those services. And the problem was is that we ended up writing off a lot of debt too on the big guys. They sucked up all the work. The industry is notorious for quite a lot of exits.
Yeah.
Doesn't mean they go, they just disappear and then they don't pay their bills.
Sure.
And so we had this weird thing where we trusted everyone on accounts, and so that was painful. And so what we had to do is we had to make it more like fair. And so we determined lead prices for certain categories on
So
the
you
site.
had set pricing.
Set pricing.
Okay.
And so we developed like
So from
price,
optioning to
a
set
traditional price
Okay.
list for
Yeah.
like a cleaning job or a plumbing job. And then we got a little bit more sophisticated. And so we stopped this auction bidding system, and we got customers to agree to a lead price, and we put them on a contract, and that sort of solved a bit of a problem and stopped that bad debt problem happening. And then in 2014, we said, hey, some of these customers are really loyal. They're coming in and out too much. Why don't we introduce a subscription product? So we had a directory subscription, we had a transactional product, and then we introduced a subscription and a subscription. It got a bit complicated, and then eventually we made a decision in 2000. I'm jumping ahead now, but in 2019, we made a call to go 100% subscription. Because that tied into the next phase
So
of
I
where we
pay
need to go.
$500 a month and I get 5 leads or whatever.
You get depending. If you're a builder, you might get 5. If you're a cleaner, you might get 50 because the value. There was a different value for the.
So 2019, we turned into a subscription model.
Yeah. So 2019, after 2018, almost going broke and burning lots of cash, raising tons of money, we said, look, the unit economics, the cost to acquire a customer, and the lifetime value of that customer did not equate to a profitable business. And so we had to change the dynamics. And the only way to make it work is we had to go from a very transactional type business to 100% subscription.
Especially if you were only supporting large organizations, they'd want you forever because they always need more and more jobs.
Yeah.
But if you're supporting small local mum and dad, local tradies, once they build up a bit of a network, they'll just go direct, right? They'll disintegrate.
No, that's right. And so that's
and then they won't need you.
So that's you're highlighting that has always been the challenge for any classified directory. We didn't invent that problem; it always exists. So what you're saying is, in like simple terms, is I went on your marketplace and I found a plumber, and it was a good plumber.
Yep.
And that plumber is now giving me. I've had a personalized experience with them.
Yep.
I've got their card. I've added their number to my phone. I don't need that marketplace anymore. And in your business model, it's like worse than. It's like that. It's not as bad as a dating platform where you get matched, you married your couple, and you don't need to date anymore. And
hopefully not.
The amount of value that probably, unless you get divorced, the amount of value that's created is huge.
Yeah.
You have children, you build a family, you build a life together. But they get like a few $100 for that small interaction when they actually created so much value. That's the most extreme example of that disintermediation of a platform. In our case, it's not as bad because it is just a plumber at the end of the day.
And subscription is what kind of buffers against that?
So it's a bit of buffer, but it still doesn't solve the whole problem. But it's a gateway to solving a problem, and I'll talk about that in a second. But the challenge that you have with disintermediation is definitely that. So you as a platform have to be really innovative and find other solutions to keep the customer being sticky. So where are we at? Just timeline. I've been talking about lots of different things.
But I've got a question for you though.
Yeah.
So you've gone through like 4 major changes, right? You started off with the directory service. 2012, you got into your auction service. 2014, you set pricing. 2019, subscription model.
Yeah.
Who was with you along that journey to help you figure this stuff out, or was it you by yourself?
In the beginning, it was just Dave and myself and a couple of other partners. So we were like just sort of stumbling around trying to work it out. But we went silly. Like I worked in a big accounting firm. I understood accounting and analytics and numeric. David and I both were very, not to sound too egotistical, but analytically and mathematically, we were super strong. And business concepts, which we grew up with family businesses, we were quite comfortable with. Like we're both quite entrepreneurial growing up. We had car washing little businesses and market stall businesses, and David had other little side hustles and all that. So we all had little things before. So we were quite entrepreneurial as you are. We had business sort of in the DNA.
So you had a really good kind
grounding
of
background. So co-founded working together. So that was the first 3 years, and then we got some early stage like VC money, and that was done by a group of more mature, experienced business gentlemen. And so they were with us for about 5 or 6 years, and then
Yeah.
we needed to raise more money. They exited, and then we got the next round of early stage VC money, and then obviously all the way to becoming a listed company. But we had we had directors from the beginning, but proper board meetings, board director governance for structures, reporting within 2 to 3 years of starting.
Okay.
That sounds like a long time
Yeah.
nowadays, but back then things moved a lot slower.
Yeah, you had plenty of time to figure stuff out. So 2019, we got subscription model. What was your next disruption after that?
Yeah, so the subscription model was really key. One of the things going back in time when I said I interviewed, thousands and spoke to thousands and thousands, if not 10,000 businesses, is that whole business admin burden. And David Wan from a fund in the US, he wrote wrote an article about systems of record and explained that businesses with systems of record that sell systems of record to other businesses that have very high sticky clients. Well, what is a system of record? It's like a CRM, ERP system, a database.
It's like zeros.
You keep a record of your business. Typically, they're the last things that a business will drop. And I was like, okay, well, we've got to get into that space. Like we're selling marketing, but you don't have to have that on all the time, especially if you're a sole trader and you're busy. You come in and out. So that results in churn, and also they disintermediate. But the reality is even if they get that relationship with a household, they still need to process the invoice, do the quote, get paid, process the payment. And I was like, well, we should be going into that space. So I talked about it 5 years ago. It took me a year or two to get the board to be convinced that we should either invest or buy something. So
why did it take so long?
I think
the way you explain it sounds quite obvious.
Yeah, it does. But you've been doing something well, and it's all about cash. Like, so we were running out of money, and there you go. You've got a founder coming in. Like,
I want to go spend money on something else.
Yeah, I want to spend something on something else. I've got another shiny thing that I want to play with, and it's like it's hard for a board that's got responsibility to protect the capital of the business.
Yeah.
For then someone to come along and say, hey, I need to spend another $1 million when you're down to a few $1 million, or you've got $1 million in the bank on something else that may or may not work. It's really difficult to do. So yeah, it sounded rational and logical, but also remember, a lot of businesses are not successful in acquisitions. They're not successful on the second product. So, to be skeptical and writing business plans, I think we wrote 3 or 4 business plans before I got it approved. But we had to go into systems of record.
But that's a complex pivot, right? To go from marketplace, auctioning leads, subscriptions to now let me become a SaaS company.
Yeah, and we didn't do it perfectly in the beginning. So we went out and we bought a small business.
Yeah, what year would that have been? Just to 2019?
About 2021.
Okay, 21. Okay,
Yeah.
so 2 years later,
Yeah, so about 21, we bought a small business just to get the IP in the business instead of us trying to learn it ourselves. Had like 20 customers, like 100, 200 grand in revenue. It was really small.
Okay.
And we rebadged that.
Like a trades management.
Yeah, it was a trades management. It was really good entrepreneurial guy. Just hadn't got funding, was doing it on his own on the side as a side hustle. And just met him, and we just sort of said, look, let's...
A counterpoint to that. So I'm on a whole bunch of tech boards.
Yeah.
Why didn't you buy something that was more like, $10 million worth of revenue?
We did.
Oh, you did that later on?
We did. No, we did. We didn't do it later on. We did look at it. I just didn't have the money.
Oh, so you couldn't fund it?
I couldn't fund it.
You couldn't get away with script? Or you couldn't raise it?
The board said, yeah, you can do it, but you got like 200 grand,
okay.
500 grand to do it with. Like, what do I do? So I went and spoke to the bigger players. Subsequently, one of them sold for a lot of money. Would have been a great decision, but it was very difficult to raise money at a low valuation, and people come in at a high valuation. Like, it wasn't possible.
And you could have convinced, and script would have been hard. They want cash.
I couldn't raise cash. I couldn't raise the cash. I didn't have the cash in the balance sheet. I had a few $100,000. I found a small player, and I said, okay, well, we'll do it slow. It meant slower, a lot slower. Like, it delayed us a year and a half. So what we did is we bought something, we got it going, we put a couple of people in the team to give it some resource. Made it full time. We had a crack at it. We tried to sell it as a standalone product. It's called Tradiecore. That's what we called it at the time. It's now called Hipages for Business, and I'll explain that in a second. But so we started with Tradiecore, and then Tradiecore got some traction. I think at our peak, with free clients and all that, we got it as a standalone 1,000 customers, and then it fell back to 600-700 customers, and we just couldn't grow it. It was stuck. And then I remember the chief product officer at the time. We were having coffee down our offices in the city in Hilton, downstairs in Cafe Chino. And if anyone's familiar, it's like a
Yep,
little bit
I
of
know
a
the
hub.
one.
Everyone knows Cafe
We've had
Chino.
coffee there.
Yeah, we've had
We've
coffee
had our
there.
first
Yeah,
coffee there.
yeah,
We're like a
Cafe.
decade ago. Yeah.
Yeah, absolutely. And so we went down there. Oh yeah, back when you were in Urbanize, we were
Yeah,
having a chat to see if we could do something with each
Yeah.
other, right? So we were there, and he goes to me, Robbie, I think we need to combine the Hipages business application with the Tradie Core application. It's going to delay us a year to do that integration. And I looked at him and I looked for the nearest bin to vomit in. Because, you know, you put your credibility and you talk about this momentum and this is all
And
these
now it's
dreams.
not going to work.
It's not
Take
going to
another
work. I
year.
have to pivot and it's going
Yep.
to lose another year. And I was like, all right, what do we do? But I knew he was right. And we made the decision. We put it in our planning. I make it sound so simple when I talk about it now, but the anxiety of the stomach churning of this happening over that year was difficult.
But what I'm fascinated about, again, just being on board, like, how did you sell that to the board? Because if I'm on the board, I'm like, oh, okay.
Great difficulty.
Like, I get something's changed, but like, how did you start?
For me, it guys comes out. It's just the numbers. I either show a leading indicator, a leading measure, talk about the run rate, and then talk about and be transparent and honest, and also say, hey, look, we tried this, it's not working. And then I think the failure of founders is they live and cling onto the dream for too long instead of taking a good cold hard look in the mirror and saying to themselves, hey, I don't know if this is actually going to work.
But wasn't the dream even buying a SaaS company? I mean,
it was, but it was low risk. It was low risk because at the end of the day, you know, your business turning over at the time, $40 million, and it's going to spend $300,000. It's not. It sounds for most people that's a lot of money. I get it, but when you're doing that kind of turnover and you've got a couple of million in the bank and you need to innovate, a couple $100,000 is insignificant. It's not going to make a difference. You can burn that. I mean, for God's sake, we were burning at some stage in our history $3 to $5 million a year in cash.
Sure.
You know, so like a couple $100,000, like this thing.
But why did you persist at this point with Tradie Core?
So I think I mentioned earlier, I totally believe in being a platform, and I totally believe that we need to be we've got this incredible distribution where we touch every year, transactionally touch 50,000 businesses. Non-transactionally touch, like as in people try our products out, use a demo, register their interest, another 30,000 on top of that. You know, and they're all coming in specifically to look for a marketing solution. Whereas I fundamentally believe that if you have a platform that trades use as their system of record, you will get stickiness. Now, I've seen that, and if you get a customer to use multiple products, their retention as a customer is better. And the best examples are banks, right? Yeah. So if you just have a bank account, you can move bank accounts really quickly with open banking nowadays. It's not a problem. But if you have a credit card, or if you have a loan on top of a credit card, like a mortgage or a car loan or an insurance product with a bank, you're stickier. Look at Apple. Apple's products aren't the best, but I have Apple TV, I've got an iPhone, I've got, what else have I got? I've got iTunes accounts, I've got, you know, like I've got a Mac.
Ecosystem.
Yeah, you're locked into the ecosystem. Like, you know, some of their products are really good and they look pretty and all that, but you're never going to leave. So those concepts are not new. And I so fundamentally believe that if you can have a platform and you've got distribution and you get a customer that buys multiple products in that distribution, then the retention should improve. That's the hypothesis. And then you go into what we call correlation, statistical correlation, and then you go into causation. And so causation is the best because you can say that this feature adoption or this product that's being bought is directly attributed to the retention benefit of that customer. So I fundamentally believe in that. And the only way to do it is to get a platform. So taking that moment where I got told at Cafe Chino,
you're about to vomit.
Yeah. And it was like, and then I said to him, they said, yes, okay, we'll amalgamate it, but it's now the platform. This is the platform play. Everything is going to be rolled into one, and it's now, think of it as the cradle for our business ecosystem, and all our customers now are subscribing not to a marketplace, they're subscribing to a platform. And job management is now bundled, not to be sold as a standalone.
It's bundled.
But bundled it's bundled as part of the marketing suite. Whether they use it or not, it's irrelevant. It's there because it's the platform.
Yep.
And the platform is therefore now a gateway to introduce new services to the customer, leveraging the data that's generated inside the platform.
Yep.
And we can talk about where the story is going to go from there to drive the growth.
I mean, I think that makes perfect sense because, you know, back in my urbanized days, we were a system of record. We were a core accounting system. We try to manage this in trades.
Yeah.
And we had like no churn.
Yeah,
Like the only churn you'd get is when companies went bankrupt.
that's right. Yeah,
That's the
yeah,
only
yeah,
time, and then you
yeah.
get like 2 or 3% a year. Like, yeah,
And remember, we looked at each other's
yeah,
businesses in a
back in the
bit of
day, yeah,
detail back in the day, and the difference with Urbanize is that you're dealing with relatively large
yep,
strata
very
businesses,
much so.
probably larger trade businesses
It
that are
wasn't small.
familiar with it. They
It wasn't
weren't
small.
small.
Yeah.
Whereas we're dealing with a mum and pop, and they just generally do have a high exit rate. There's about an 18% exit rate
Really
every
that high?
year in
Oh
the
wow.
trade space. It's
Okay.
really, really high. It's home improvement, so that's
Yeah.
cleaners and gardeners coming in and out because some of the services you don't need to have a high skill, and then
Yeah.
also if you think about trades in the economy, it's an interesting one because you've got large infrastructure projects, you've got large builders that get subcontractors to come in, and so the skills are interchangeable between
Sure.
infrastructure and large builds and subcontracting. So maybe if they're having too much of a hard, it's not easy to run a small business.
They can
Everyone
swap
knows.
into
You just swap in and like
large
almost
infra.
take it as
Yeah.
a job somewhere else.
Yeah.
Exactly. So there's a high exit rate in the category. It doesn't mean they fail. There is failure as any category, but this one was interesting. Yeah.
So what I find interesting is though, then you're pivoting now to become a SaaS company, completely different set of competences,
Yeah.
yet you seem to have executed it really well. How did you build up those competences?
Yeah, so we've now got a few teams in the business that are supporting the SaaS part of our business. I mean, we're an organisation with 360 people.
But how did you even build the competence to manage a SaaS organization? How did you
I
go
just
through that?
hire good people. I'm no
You just
confident.
got the
I'm not
yeah.
confident at all. I just get good
So
people.
you're competent
Yeah,
hiring.
yeah, that's
Yeah.
right. Yeah, I'll just get good people that understand it, and we've been hiring for people that understand how to build SaaS and build SaaS solutions, and we've been learning as well along the way. So we've got some really competent people in the business to do that. Yeah, so that's probably the best I can answer on that one.
Yeah.
Yeah.
And did you then put like a SaaS exec on your executive team? Did you need to do that or on the board or?
No. Oh, we've enhanced. So we've got an advisor that does work in marketplace and software, and
Yeah.
then we've also got like a Dear Schiffman, who runs his own podcast on the Contrarians, which you might be familiar
Yeah.
with. He's the director of Hipages and is executive chair of Catapult Sports. So
Okay.
so he's obviously got a lot of experience there, and so we listen to him, and then
Yeah.
we've got our own internal people. So we've sort of become very technology-driven organisation, and
Yeah.
I would say if I look out into the crystal ball into the future, Hipages is going to become even more of a technology organization, and very much focused on AI as an organization to be able to sell AI technology and tools to small businesses. No different to how we were, 20 years ago, 10 years ago, where we have these small businesses that didn't understand how to get online, didn't understand how to get Google Ads to work for them, don't understand social media. They're good at their job. They're not good at the marketing and the admin and the back office. Effectively, where we're moving towards is inside the platform becoming a business in a box for those customers. So we're going to be a business in a box for those trade businesses, and everything they need to run their business end to
You'll be
end,
there. Yeah.
we will be there for them. And if it means we build it ourselves, we partner, or we buy businesses, like we just announced a purchase of a insurance company. We just bought
Like workers' comp, indemnity, that kind of insurance? Or?
public liability and
Liability?
a whole bunch of other insurances that will go with it. It'll be embedded insurance, and now inside our platform, trades can now not today, will be in the next couple of quarters. They'll be able to double click and get their public liability. Now the power of the platform is that we have the data on the business.
You can price it better, can you?
Absolutely, right. So we'll know what their certificate of currency is. We can put a better product. We know what their business risk profile is. We can actually put a much better product to the 80,000 businesses that we touch, which is a quarter of the Australian and New Zealand market every single year.
Okay. So then do we fast forward from SaaS 2021 to today? Is that
pretty much it? Yeah. So yeah. And we just did an investor day, like I said, literally just yesterday, and we made a bit of an announcement. Yeah, so we cracked we have in Australia just a little under 33,000 customers, 32,500 subscribing customers. Remember, we service 50,000 customers a year.
Yep.
But in our
other people come off and on as they
need. Yeah. There's come on and on and off and on and on and off, whatever. Yeah, so they come in and out. But we just cracked 7,000 customers using our software.
Okay, cool.
Just under 7,000.
Yep.
And we've identified through a discovery process what are the things that these small businesses absolutely need as a system of record to run their businesses. And they want better estimating tools. They want better quoting tools. And we've embedded AI to help them estimate and quote better. Coincidentally, there's been an amazing side benefit. the customer experience, so the household experience, has improved materially in the last few months. We're seeing NPS scores going through the roof, and the thing that people always complained about was reliability of quotes, reliability of the trades, professionalism, and we, by providing these tools to the trades, are making them more professional. I think the thing that's worth mentioning is that back to the problem of why now, why is this moving now, and why they were so slow in adopting other technology. I think the macro environment, not just a generational change with technology, but the macro environment is forcing behavioral change. It is really competitive out there. People generically say, oh, it's so hard to get a tradie. It is a little bit difficult, but consumers' tastes, expectations, speed of responsiveness, professionalism has all just elevated.
Yep.
And if they don't get what they want, they're online complaining about it. And so the trades are getting attuned to it. It's a bit slower in moving in that there, but they're getting abreast of that. They understand that. And now they are lifting their game. And the way to lift their game is not through spreadsheets and Word documents and clunky photocopying and emailing and typing stuff up. It's through software systems that make their whole process so much more efficient.
Can I just, what's your revenue now? I'm public, so.
So it's public. So we've targeted to the market that we'll do somewhere between 90 and 91 million this financial year.
So let's just call it 90 for simple maths.
Yeah.
You know, the irony of it is, and I know this isn't the topic, it's not about SaaS valuations.
Yeah.
But if you were just a SaaS company with 7,000 customers and just say, I don't know, $25 million SaaS revenue.
Yeah.
You would be a $300-400 million business right now.
Yeah, I know, right? Yeah.
I know.
Yeah.
It's a conversation for another day.
Well, I don't know. Yeah. It's like driving me crazy. I think the thing that's driving me even more crazy is that I'm like getting articles sent to me from Forbes and all my contacts. Oh, this company is doing AI virtual assistants for trades. Like all they do is answer the phone and do an appointment for you in your calendar, and they're getting $1 billion valuation with no revenue, no customers. And I'm like, hey guys, we're literally next quarter are going to be testing the very solution on our distribution and charging customers for that service. And we don't get any value for it, like nothing.
Let's talk about AI first, and then we'll wrap back into that.
Yeah.
I think there's two parts of AI that I think a SaaS CEO should think about.
Yeah.
I'll call you like a SaaS CEO, right? That's a third of your business.
Technology CEO.
A tech CEO. Yeah. One is, how do I put AI into my product, make it better?
Yeah.
Three things. AI into my product. So how do I make my customers more efficient?
Yeah.
I've always thought there's a cost for the platform. That's irrelevant. The cost is admin people doing shit on my platform.
Yeah.
So let me get rid of all the admin people need to do.
Yeah.
That is solvable totally. You've got your internal team will totally do that.
Yeah.
Second one is, how do I make my internal departments more efficient? How do I have agents doing stuff that people are moving files from here to here? The third part that I'd love to quiz you on is, how do I stop AI from making me irrelevant? And I'll give you my example.
Yeah.
So I mentioned I went off to go meditate. So I was gone all of Jan, Feb, March. So when I left, OpenClaw didn't exist. When I got out, OpenClaw existed.
Really? Okay.
So I only had my first free weekend last weekend. So I hacked into OpenClaw and hacked around and built my little model. So I'm up to Brizzy next week to get my driveway fixed for one of my properties. Yeah. So 3 months ago, I would have totally used Hipages. Yeah. But what I did now is said, hey, OpenClaw agent, here's my address. Here's the specs of what I need. Here's a couple of photos. Can you find me 10 tradies with more than 4.5 Google star reviews in that local area? Yeah. Message them through my iMessages and try to book them in for that day. Yeah. So 3 months ago, I would have totally used your platform to do that. Yeah. But I didn't. Yeah. And that took me like all of 30 seconds to build. Yeah. And it worked brilliantly. Yeah. It was proper creepy AI. Yeah. Okay. So did and as they reply, it picks it up. It's popped up to my calendar.
Did they reply to you?
Well, they thought they were replying to me. They replied back to my message.
Your mate agent.
They replied by email and my messages. Yeah. And now they're kind of booked into my calendar. Yeah. And I'll just tell it, hey, the day before, just send them a text to remind them. Yeah. So what I've done in the last month, I used to spend about $1,000 a month on SaaS platforms, just enough, right? One for my emails, one for calendar. Yeah. I probably reduced that by half. Yeah. And I've now upped my OpenAI and Claude spend to $300 a month. Yeah. I just spend all my money on the core utility tokens now, not on the SaaS platforms. Yeah.
So the headlines sound fantastic, and it sounds like it was a good experience for you.
And I'm probably an outlier in terms of tech ability.
Yeah. So that's my point. Yeah. So my point is, first of all, how do you know that the trades that OpenClaw product, or I don't know what you want to call
Yeah,
it.
well, yeah.
Yeah, you've had an output from running
Yep.
OpenClaw, or a piece of something.
Yep.
How do you know that those businesses that you connected with actually passed through a vetting check?
No, I've got none of that, right?
Absolutely
Yeah.
right. Okay, so I'm going to build to an
Yep.
answer
Yeah,
to
yeah.
you here. But I'm
Yep.
going to unpack it
Yeah, please do.
step
Yeah.
by
Yeah,
step.
yeah.
The things that you don't know yourself. Like I think to be clear, you're an outlier, absolutely, and that's you're an early adopter,
Yep.
but
Leading edge, yeah.
I don't feel that that's a strong enough argument to counter to what you're talking
Yeah.
about, because early adopters just means that they'll
Digital
become
cameras were early adopters.
correct,
Yeah.
right? So that's not a strong argument to come back to you and say you're an early adopter. All it does is it buys you time. It buys you time. It buys you probably.
Couple of years, maybe.
I was going to say, as I was speaking,
Yeah.
I was thinking, if I say a year, I think that's too soon. And I think if I say 3 years, it's too long. So I
Yep.
think a couple of years too, I think
Yep.
is reasonable. So that all that does is buy you time. So it doesn't counter your argument to me about being disrupted. I think now we need to unlock what is the differentiation of what Hipages does to what OpenClaw does. And I think it's very hard to replicate. And I can tell you why, because I understand the details behind it.
Yeah.
And then what do we do in that time to address that? Because all I've bought in this debate so far
Yeah.
is a couple of years of time.
Yeah.
Agree with that?
You got 2 years. Yeah. You got
agree.
2027.
Yeah.
2028.
2028, probably 20 and 28,
Yep.
right?
Yep.
I got a couple of years of time. Okay, so
This is not the first time it's happened to you. This is like the 5th time it's happened to you.
yeah,
right?
it's fine.
Yep.
It's fine. And I think at the end of the day, even with an early adopter, like that's a risk. It's not 2 years, it's probably 5 years till you start to become into some sort of simplified mainstream. But
Yep.
I'm not buying myself, I'm not negotiating anymore with you. I've agreed 2 years, so I'm not just
Yeah.
being
Done.
clear.
Deal done. Yeah.
Yeah.
We've got 2
But-
years. What are we
but-
doing? What are we
But
doing?
what are we doing? So the question I have for you is: do you know the vetting that was done by OpenClaw on those trades, and how confident are
Yeah.
you? Now you may not care, and that's fine.
Yeah.
But I can tell you, you run into a lot of risk, particularly when it requires licensing.
Yeah.
What it's probably done is it's probably identified some review management, reputation, online
Yeah.
scores.
Well, I told you to use Google, so it's probably just people listed on Google.
So here's another problem, which is one of the things we're building, is only 30% of home improvement businesses have an online review.
Really? Is that a thing?
It's absolutely a thing.
I would not have known that.
Absolutely a
There you
thing.
go.
So when you
Learn something new.
so you're not getting a broad universe. You're only getting the universe of some customers that are not vetted, that are available on Google Local. Only 30%.
Okay.
I don't understand it. It's been something that's been.
Not everyone. I just assumed everyone.
I'm fixing it.
Yeah.
I'll tell you,
Yeah.
we're fixing it. I should say I. We. When I say I use it collectively as
Yeah.
as a unified team. But I was shocked because I've been trying to get not only Hipages reviews on a reputation on a customer's profile, a trade business's profile, but also embedding Google. And I've been trying to get them to see if you're a new trade or you're new to us, but you already have some online reputation. While it's not verified by us, we can still publish it and just say unverified by us and just say the source, and that might be good enough. So that builds some credibility. Very difficult to get online reputation stuff businesses. So you're only getting 30% of the ecosystem, and you're not getting the trust element. So okay. The third thing is as well is you have to be quite specific in describing your problem.
Yeah, correct.
And you actually have to know kind of what trade you're looking for.
Yeah.
And that's something that not most people actually know unless you've had some experience working with trades. And usually that comes after 10 or 15 years of living in a property. Most people don't know.
And I've worked for companies that manage trades. I've got a lot of confidence in that area.
So you're again another outlier of an outlier. And I think it's starting to get into a little bit too hard basket. Now, if you have a problem and you've used an unverified trade or an unlicensed trade, you don't have a lot of recourse, and you lose. And it's not little money. The average size of a job on Hipages is $2,500. So trust is becoming quite a big thing, right? So what do we do to differentiate ourselves? First of all, instead of you going to Claude and building something, just come to us. You don't have to build a thing. We've already got it for you. So the innovation of searching and finding vetted trades, is all happening right now. So we actually have live in our product. You can say, hey, I've got a problem with my driveway. It's like these cracks on it. I think it needs to, here's some photographs. I don't know who to use. I don't know what's required. Can you just help me scope this out? And you can video that, voice it, load a couple of photos. That's all you have. You have to voice it. So just talk like I just did into our agent, or just do a video call, load it up, or take a couple of photographs with a couple of comments, and the agent takes care of everything for you. You don't have to be a coder. You don't have to be anything for this. And then you layer on our trust, because we do. That's what we do with our trust. So we'll be having 100% ID checks, insurance checks, license checks. We check the 60 different authorities in Australia now. To be fair, Claw can it can do the license checks. It's very difficult because there's not really clear APIs.
And it wasn't part of my prompt because I would not have thought to do that.
But then it's on us to message that clearly through our brand so that we avoid people coming through that type of sort of like, that's a broader discovery question. We need to continue to enhance our trust elements and show the ease of using our product so that you don't have to be an engineer. You don't have to go and remove that. I can tell you now, if you go to most people to talk about what you just did, that would create anxiety. It's actually, I don't know how to code myself, but that would create me anxiety. I wouldn't know what to do. I would look at it and I'm like, I don't know what to click. I can't even use Canva. And I look at my kids and like,
I don't use Canva. I will learn PowerPoint. I'm too old to learn it.
No, I can't learn Canva. No, that's exactly right.
I just tell them, send me the PowerPoint version.
So the reality is it's really more like 5 years. Now I'm going back to the original 2 years. I just finished it. It's 5 years. And I think in that time, we need to continue to enhance our trust, continue to build our brand, and just have those tools available so you don't have to build anything. It's all done, taken care of you, and you know you're getting the best and all those issues dealt with.
How do you know that you're not being like Sol at Telstra, right?
Sorry, Sol.
They're like the ex-CEO of Telstra, right?
Oh, how do I know?
Yeah, how do you know that you're not being like that? You're not being like the CEO of Kodak at the time?
So I think the key is just to, I think he wasn't in touch with what was going on the ground. Like, I don't know, it was almost like, his story was specifically, he was like not Australian really. He didn't really care. He was probably here for a period of time. It'll be someone else's problem. And I don't think he was in touch with what was actually happening on the ground.
So I'll give you the context of why I give that as an example. Like, he would have given probably the same set of arguments about Google Schmidt, right? Yeah. He would have been like, oh, we're the trusted brand. We talk to these people. We make sure they're real. We do all that kind of vetting for you. Google, anyone can put something on Google. Yeah. He would have probably made a very similar argument to you're making.
I don't know. I think I'm arguing it differently.
Yeah, explain
differently.
Yeah,
I'm not. I openly said I'm not saying Closh more. I'm saying I'm openly saying it's a risk. Like absolutely. I said earlier in the maybe we were pre-recording. I was saying to you, I think the thing that I don't know the answers to is I think organizations, and you covered it nicely, and we don't need to unpack it because if you're not doing anything with agents or LLMs or anything with AI to improve productivity, improve customer outcomes, you're going to get broke, right? So you've got to do it.
But that's just a given.
It's just
every good company does that.
Every tool, like we've got agents now doing debt collection for us. We'll soon have sales and service agents to enhance and augment our current opposition, and augment as in like making it available 24/7, multiple agents at the same time, agents checking other agents and doing like all of that from engineering to service to customer facing stuff. That's a layer of all happening in the business. And then there's another layer that I think above it, which is product development. So we're having that virtual assistant in our software solution. We're building that. That's happening in 2 quarters. It's coming to life.
Before I went to meditate, I had 3 EAs. Yeah. Now I've gotten rid of all of them.
Yeah.
Because I just use OpenFloor as my EA.
There you go.
So you'll have an EA for every single person, right?
Pretty much, yeah. And it's like, it's fine. And that's going to happen. And we'll make. Yeah. We might not need as many, but we'll be having more productive people as well.
If I can say, like, that's a trivial problem to solve.
No. But I'm getting to. I know I'm building up, but it's going to take a long time to get to the question. Yeah. But I did say that the disintermediation of the zero-click world is a problem, and I'm aware of that. I think also just the experience, the core thing that you built, the products that we are building inside Hipages are exactly that.
Yeah.
So we're actually making our product. We already have 68, 70% brand awareness, and that'll continue to go up. We just got to get that out to the customer and say, don't bother doing all this stuff.
Just use it.
Just use us. And
So
we'll do it better than what
Yeah.
you would do on your own, because we've thought about all of the issues. I'm going to give you a few of the issues.
Yep.
Because there's also did you do a solvency check on them?
Nothing.
Nothing.
It wasn't part of my problem.
Yeah,
I would not know
Okay.
to do
Did you do a social, not just a social media check, but what they call a scam watch check?
No, the only vet I had was more than 4.5-star Google reviews.
No,
that's the only vet I had.
Right.
I did none of that.
But remember, it's
Yeah.
a limited market, and you still don't know all of the other things, because they could be going broke and still have 4.5-star reviews.
Yep.
You don't know.
I don't know that.
Well, we do
Yeah.
that, right?
Yeah, yeah.
So we've got to find out how to turn that negative bit, but into a positive conversation. Say, hey, feel trust assured, solvent, licensed, all of that stuff, and that needs to be. And you just don't have to just use us, and it's this easy. Tell us what you need, bomb, and that's that's happening.
So there's two options you have. So what you're saying makes perfect sense.
Yeah.
And every great SaaS tech company, directory company will do that, and I can totally see that succeeding. The other option you have is if you wanted to go super high risk, high return. Have you heard of MCPs?
No.
So it's where you can actually connect your data set to a public model.
Okay.
So you can literally go to Claude and say, here's the entire Hipages data set.
Yeah.
Super high risk.
Yeah.
And be like, anyone who's using Claude or ChatGPT or Gemini,
Yeah.
they can come through your protocol and pick up trades and pick up that info.
Yeah.
So basically, you're giving up your entire user interface to a chat window.
Yeah. So maybe that's where you're going with totally disrupting your entire business model and opening
Because
it up.
that is insanely disruptive, and it's super high risk. So I'm not suggesting that's the case.
And that's it. That in your argument, I would say that what you just said is where the counter positioning of doing what you think is normal could be. And if you think about a board environment, I would not be able to get that through.
That'd be so hard.
Yeah.
Me being on a board, I'd be like, that's a crazy idea.
Yeah, that's right. Well, you're on a director of half a dozen, right?
Yeah.
Would you? No, that wouldn't happen. But there is always a but. I wouldn't say never on anything. If there is a commercially viable way of making that
you got to monetize
work,
it. You got to monetize it. Otherwise,
and you could find a pathway. I don't say no to stuff. I often will say, let me think about it. And if I get stuck, I say, look, let's put a pin on it. It's not a bad idea. I just don't know how to make it work now. And sometimes I find just in my own executive career is I don't necessarily, I'd like to be the guy that knows the answer straight away. And I generally am pretty good, but sometimes it's a good idea. I don't know how to do it yet. Let's put a pin on it. Put it in the parking lot.
Back of the mind.
Yeah. It's the fester.
Yeah.
And something here and something there that might bring it together that'll allow us to say, let's bring this to life. Not in the form that maybe you said, but 90%.
Yep.
And I don't know what that is yet. And I think the reality is I wouldn't be too quick to making a decision right now because I'm not seeing anything yet disrupting the model.
Yeah.
But what I would say...
You don't have evidence yet to...
no evidence. But what I keep your eye close to seeing the model being disrupted, but then also... the space is moving. You were in a meditation retreat, for
45 days.
And something
and
was
everything changed.
Everything changed in 45 days, right?
Yeah.
So what's in the next 45 days?
idea.
And what's in the next 90 days? What's in the next 180 days? What's coming out that's the next thing? And I'm like, we would have already locked and loaded a position into something, whereas in 45 days, it's moved on and it's reinvented itself 3 times over. So I'm a bit nervous to I said, like, I found that whenever I've made too quick a decision and not turned out the best, I think there's an opportunity let's just watch what's happening for the next 3 to 6 months and see where people find their feet. We didn't invent classifieds. We didn't invent a trading marketplace. There were others well before us. And we came along and picked the eyes and did a little bit of our own secret sauce and did a better job of it. So what I found is the guys that actually went ahead and did something faster, too quick, with a rash decision because the customers were complaining or someone was saying this to them, they're not failing. They'll fail.
So I'm not suggesting speed necessarily because this might be like a 3-year thing to figure out how this actually works.
Yeah.
But the macro thing, which I've only thought about this for a couple of weeks, I've only been out for a couple of weeks, is
it's like you locked yourself up in meditation.
I'm going to go back again. Is I wonder if the whole era of apps and SaaS applications, in 100 years, they'll be like, that was a 20-year period or that was a 30-year period.
Probably.
And
Probably.
in 5 years, 10 years, I don't know the time scale.
Yeah.
The thing of SaaS will be like, oh, that was the thing my
Yeah.
grandparents did.
Probably. Yeah. I don't know
And you want
5 years, but
yeah,
I think
2030s,
I would
2030.
100% agree. I think it'll be different. I mean, very different.
And when you said, why does this other company have $1 zillion valuation with no revenue?
Yeah.
Is I reckon they're playing on that string.
Yeah.
They're playing on the string that
Yeah.
we are the post SaaS world,
Yeah. Yeah.
and we're going to dominate, and we can do this, and we can do that.
Yeah, it could be. It could be. I think I have to get up every morning, come into
You
work,
still have a day
the
job,
day
yeah.
job, and we've got still all the things to do. And I think I dream up. I've got to, fortunately, I'm in a position where I've got a very strong executive team that gives us some capacity to think about these things. And I've got some very healthy advisors and people that are around us that can challenge and throw things. And so we're thinking of these things. One thing I would say is that organizations definitely have to be more adaptable and subject to and resilient to change. Yeah, so if we see movement, we'll change.
Yeah.
Absolutely. Yeah. Yeah.
And I mean, and what you've evidenced in your history is you've got the ability to actually go place the bet, and you can execute really well.
Yeah. Yeah.
You just need the next couple of years to figure out like what that bet is.
Yeah.
And I got no idea because, like we said, in 45 days might be something completely different.
Yeah.
But some things are happening.
Yeah. Definitely.
Some things are happening. I've got no idea what it is and where it's
Yeah.
going to end.
Yeah.
But then, how do you? Because you will plan 12-month cycles, right?
Yeah.
How do you think about that as you go through your planning?
Yeah, so I think like we're doing a board strategy session next week, for example, and we've been working on our strategic planning with the team for the last couple of months. And I think it goes back to my point where we haven't been rushing, looking at what's happening. And like just as an example, just sort of speaking to generally, sometimes it's good to just use a real example. So how are organizations introducing agents and AI technology into their business? And there's probably three regarded methods to do that as an organization. One method is let functional and cross-functional teams run around doing their agents themselves. Another one is create a whole brand new division in the business to go out and reinvent itself.
Yep.
And a third one is create a cross-functional team in the business,
Yep.
and that supports the rest of the functional and other cross-functional teams. So we've been pondering how to deal with that, and we started with scatterbrain, like bits and pieces everywhere, and then it became a bit chaotic because one team's using like 11 labs, and another one's using another tech company from Silicon Valley that's just started up. It's just, and someone's using some of the open AI tools, and someone's using Claw, and it's like it's just chaos, right? And I'm saying, okay, well, we're now past that point. That was good experimentation and learning for the last 6 months. We're actually going now with a definitive plan. We're going to have a cross-functional team, and their remit as a strategic imperative is to introduce agents across the business using a centralized sort of methodology and technology. That's kind of like strategic thinking, and then a bit of execution on the execution in our plan. Yeah. And so, when we think about that, that's like an example of how we're applying AI in the business. But when we think about the products are evolving, and we're doing discovery with our customers. We know what they want, and then we're looking at these $1 billion plus valuation businesses and saying, what's the market liking? Why is let's validate that rather than just being finger in the wind, and the validation saying the market likes that. And if you picture a future, like you said, 20 years, you can see that future. You can see a future where you talk to an agent and they order materials for you, and they confirm your next appointment, and then get your calendar all synced up with your private event, and then your route is optimized, and your invoices and payment is processed all seamlessly without you doing much other than saying done job's done, which may even be able to be detected when you're in your van on your way out. It's like, so, we're trying to picture the future with a vision and develop that into a strategy and an execution plan, and then build budgets and plans behind it.
Yeah. And even to get like the core agentic AI into your product, into your company, that's 2 years worth of work. Like you're going to be busy for the next 2 years. Anyway,
no, that's right.
Doing that.
Yeah. And I think, we spent a lot of time talking about the platform, but we also, we talked a little bit about the homeowner experience, but then, how do we go beyond just using Claw? So what about we had the proprietary data on your house? So your properties, you rent a property or you own a property. We actually know the trades that you've used on your property, which can also be replicated by Claw. I get it. But then we know all the floor plans for your property. You don't have to redo it. It's all there. It's all safe. It's like a vault,
Yep.
And we can develop also a maintenance plan for your specific property, all inside. And it's using your preferred trades, who you like, who you pay, payment arrangements, all of that. It's all taken care of. It's very specialized, and I think that's kind of where it'll evolve, where a competing product like Claw will find it hard as a user and as a business for you to be able to support.
Yeah,
You find smart people like you to go and build it, but we'll do it at scale.
It's not the majority yet.
Yeah, it's do it at scale and in volume. But then you'll be embedded in a system of record that you prefer, which is ours.
Let me use just one more example about how I've used OpenClaw. Not in your space, but my wife wanted to get like a teacher to teach the kids how to do Bharatanatyam, Indian dance.
Yeah.
She sent me a link for SuperProf, one of those marketplace for tutors.
Yeah.
My wife couldn't figure out how to sign up.
Yeah.
I just forwarded it to OpenClaw.
It worked it out for you.
Well, no, what I did, it went, signed up, messaged the tutor, she emailed back, and then messaged my wife.
Yeah.
So in that case, I still totally use the platform. I just didn't have to go through the sign up.
Yeah.
Do you guys, as the marketplaces, care if people do that? I mean, that I don't actually log on to Hipages. One of my agents log on and does all the clicking through for me. Does that make a difference?
So I haven't had that been posed to me yet. So I guess one of the
as you think on the fly,
challenge the CEO.
Well, it wasn't a thing a month ago. That's why no one's posted to you. I'm still clicking. So someone's clicking. It's just not me.
The real life practical example that I can align it to is we've had business coaches come to Hipages in the past. Actually did the right thing and said, hey, I'm not the trade, I'm like their coach and I'm helping them with their marketing. I'd like to get them a profile set up, but they really don't know how to do it, but I want them to be a customer of yours. Will you accept it? And I said, yeah, absolutely. That's a great thing. First, you've got a business that wants to do better. They don't know how to do use the tools. It's like they're being honest about the fact that they don't know how to do it. Maybe because it's a bit harder or trickier, we need more information. You said, I know what they need to do. I know how to make it happen. I'm going to help them. Why wouldn't we accept an agent to do it? That's being stuck in the mud. So I would accept that for sure.
Yeah. Okay. Fair enough. Well, just to wrap up, so the original question was like, how do you make your platform relevant in the age of AI?
Yeah.
So where do you think we've landed?
So I think, I think it's clear in our strategy. We're very focused on that. I think the future for I call it platforms, because as a marketplace, which traditionally was just connecting people, we can make that more seamless, and we can use AI to make that more seamless. But we also now have what we call a platform for the businesses, the supply side of the original marketplace, and a platform that's forming for the demand side. And inside those platforms are an amazing raft of tools and benefits and perks that will be powered by AI that will make like unique and differentiated experiences in our products for our customers, which ultimately, if we can communicate that externally, will help us grow customer base and make them stickier as customers. Stickier for trades, as in we want to make them stay with us, and they may not necessarily need marketing on all the time, but they'll use anything. They might need our insurance. They may need their job management, they process their payments, issue an invoice, external jobs, all of that will be done there. And for the household, think of a command center for your property where your dreams, your inspiration, your aspirations, your requirements, your needs, the repairs, the maintenance of your property, and the whole log of that captured in your platform as a household. So, and that'll all be powered by an AI agent managing that for you, simply. And that's kind of like the dream of the product, and that's sort of a product roadmap for the next 3 years.
Okay, brilliant. Well, last question I always ask everybody when we finish up is, what is something you've always known to be true that later on you actually found out wasn't?
Oh, wow. You prepared me for that question. At least I would have thought about it.
It's better if you don't think about these things.
This is a silly one.
Go for it.
This is a silly one.
Yeah.
I don't know if it's going to make its way into when you edit it, but I, for some reason, assume people would be able to do basic mathematics, like simple mathematics to understand concepts. And I actually found out, I think I'm the abnormal one. I think 10% of people can do proper maths and calculate things. Sorry?
I reckon you're probably right.
And then 90% literally cannot do like simple mathematical stuff, and it makes you the one that does maths, the odd one. And it's like, but the problem with that is that numbers are almost like the beauty of numbers, and maybe it's just maybe the ADHD in me, or
Yep.
the OCD, and all those things in me, the neurodivergent element of my personality.
Yep.
Everything has to sort of reconcile. Numbers have to make sense. And I found that most people, they get on their lives perfectly well with numbers don't reconciling. And I think maybe it's keep it simple. The accountant in me,
Yeah.
everything has to make sense and things reconcile. And most people can't get things to reconcile. So I don't know if that was enlightening or helpful for anyone. Maybe don't end it on that one.
Most people don't know basic maths.
It's just a basic maths. And I think the thing that I have to learn is I just have to be calm and explain it one at a time.
Yeah.
And some people just don't get it. They just never get it.
Just hope they're below you in the org chart, not above. That's the only hope I'd have.
Yeah, maybe don't put that one in, but But if you ask me the truth, I just thought people can do maths. People can't do maths.
Yeah.
It's terrible. It's so bad.
Fair enough. Awesome. Great.
Was it good? Was that what you kind of after?
Perfect. Yeah.
Thanks for listening. I hope you enjoyed it. If you do want to be a guest, make sure you hit me up and do follow me on socials and make sure you check out future episodes. Thanks, guys.